Hi, I'm here again, Constantin Kogan with you. I'm going to be your host, and today I'm delighted to be joined by Santiago Roel Santos. Santiago has been invested in crypto since 2013, and he's a partner in ParaFi Capital. And a few words about ParaFi Capital. It's an investment firm focused on the decentralized finance, or as we call it in the industry, DeFi. And the team leverages over a decade of institutional grade investing experience, and they were been invested in private equity and credit and lending, and they're coming from the such firms as KKR, TPG, and JP Morgan, and typically focus in early stage blockchain focused companies. So before we start with Santiago, I want to again read the legal disclaimer, which is very important because we are providing this content as for informational purposes only, and it should not be construed as such as any material or as legal, tax, investment, or financial, or any other advice, right? So we're going to make it fun and interactive. So hi, Santiago.
Hey, Constantine. Thanks for having me on the show.
Yeah, sure. We spoke several times before, and I know you're focused on decentralized finance, right? But before we get into this topic, I want to make it more interactive. I want to make sure that the people who are watching us or listening through podcast, they follow the latest news and what's happening in the industry, right? So the happening happens. Paul Tudor is like a famous billionaire investing in the industry. The famous TON project was just shut down from Paul, and there's comments from Paul Tudor, $1.7 billion. One of the biggest fundraising success stories in the industry also happened. So tell me, please, why do you think it really matters? Why what's happening now in this particular niche, and we're having other events as coronavirus, right? Why does it even matter?
No, it's a great question. And I think that's perhaps the most important question that gets lost on people. Why are we here? Bitcoin was started at the aftermath of financial crisis in 2008. And so it's important to zoom out and say, why does this all matter? And I think, when I started investing in crypto in 2013, I was at JP Morgan at the time. And, really Bitcoin was the only thing that was around. And the bet, and why I think it matters is, you have an alternative, a pretty interesting system that does not rely on trust. And you can apply that to things beyond money. So, I'm from Mexico, and, you certainly have a higher degree of skepticism towards the government, towards local institutions. Why? Because you have, the peso devaluing 40-50% overnight. I think when you see something as powerful as Bitcoin, it really is, we have frustrations in our day-to-day interactions. When you send a wire transfer, when you try to, you start wondering why, companies publish information and it's only on a quarterly basis and it's very limited information. And so where we come from at ParaFi and why we think it matters is, it's pretty much grown out of personal frustration with certain things in the financial system where you say it ought to be a better way. When you think about our daily interactions, everything has like an Amazon-like experience. Sort of the internet has permeated everything in our lives, except certain pockets of our interactions. And I think in the financial world, it hasn't been modernized as much. And I think you're right, the coronavirus in many ways has been a catalyst to show how acute and how in dire need of modernization the financial system isn't. You have a fiscal stimulus plan that has been approved and it's been a month, and small businesses haven't received their loans because they need to go through traditional banks to apply for the loan, and they can't receive funds immediately. And so that, I think, just opens up this idea in people's minds is like, why are we here and what could offer a solution? And I think that's where, similar how the internet, back in the 80s and the 90s, I think people used to think, oh, this isn't .com, this is an internet business, and then this is like a non-internet business. But really powerful technology, I think, just is so obvious and so it provides this sort of 10x value to people that you can't ignore it. It just sort of permeates everything in our lives. And so when you look now, every business, you don't make that distinction of what's internet and non-internet. Everything just sort of utilizes the internet to become faster, better, cheaper. And in a similar manner, I think that's the idea behind blockchain, that it offers a radically improved experience. And I think we can talk about certain examples that we see because I think that's one of the notions where people like, crypto's just Bitcoin, or it's, you look at the price and it's like speculation, and there's a lot of noise that I think just is in the industry. But when you really parse through all of that, there's some really powerful, really easy to use applications that are being built that the end consumer may not even know that is crypto, but they're using it because, in finance is very clear. If you're saving money, if you're sending a wire and it's getting there faster, then that's what matters. People care about the bottom line. And so I think that's why it matters. And I think that's what's so exciting right now, that people are waking up to this idea that, there is this alternative that's being built over the last 10 years. And we're at that point where it's becoming harder and harder to ignore, just because the traditional systems are not working as well.
You made a good point, and for sure, like there's a lot of inefficiencies in the traditional systems, and we've talked about it like in previous shows as well. Like, but I want to make it like very raw and unbiased opinions. Like, even though we're invested personally in this business and we're in this industry, but I want to ask you a question. We're talking about like decentralized revolution, like in DeFi is like a new fintech or evolution, whatever you call it. But like, it seems like people nowadays, when there's a lot of depression, there's a lot of frustration, what's happening, nobody can predict anything. Like every analyst who are trying to predict what's going to happen to the market are like, like a full of, what, right? So, the question is like, people don't care about digital assets or crypto right now. Even though you've mentioned that there are some projects that are, we don't know about them, but they're improving our life and improving some technologies. So can you make this distinction of like how actually like DeFi is affecting our life? How this is like, when our world in such a, I would say unstable moment, and we're basically like, the crossroads, so it would be interesting to hear about like, what's actually changing with examples.
Mm-hmm. Yeah, it's a great question. Look, when you can provide data, it's when people really start understanding it. It's sort of our premise. Let me give you some tangible examples. So a couple of things on the macro backdrop. So you've had FX markets, like local currencies, devalue over 20%. There's this flight to quality. So you talk about the Mexican peso, the Brazilian real, the Turkish lira, the Russian ruble, the Australian dollar. Basically, you'll start to see, and this happened in 2008, where people go to dollars. There's this concept called a stablecoin, or a product called a stablecoin, which is effectively a crypto dollar. There's different types, but the more simple one is someone deposits $1 in a bank, and then they get a digital receipt that is in the blockchain, and it's verified in the blockchain and powered by crypto, but by and large, it's just a digital dollar. And you're able to redeem it at any time for $1 for fiat cash. And you're able to send it across the world seamlessly in a matter of seconds. So since March, you've seen a 50% increase in the demand for stablecoins. One of the more popular ones is USDC, which is a project by Coinbase and Circle. You've seen an interesting data point. So a 600% increase in the number of corporations that are, in the number of corporations using USDC to transact. So this could be, for instance, Starbucks that wants to decide to pay their coffee roasters in Indonesia, as opposed to sending a wire through SWIFT that may take days, and onboarding them takes, much longer than that. They can seamlessly pay them in a matter of seconds. What's interesting is, so there's been 600% increase in the number of corporations using stablecoins to transact with vendors. 2/3 of those have been non-crypto businesses. Because a lot of these, when you look at the demand, it's like, well, it's exchanges, it's people in the industry. But no, on the contrary, I think we're seeing a lot of adoption. Why? Because again, faster, better, cheaper. You're able to move funds more easily. think with social distancing, with remote work, people are looking to these alternatives to pay people without checks, without having them to go to the bank. And USDC or stablecoins become what we look at as like the Trojan horse of crypto. In the same way that email sort of like really made people realize how they needed the internet. Like you need an application like that is just so pervasive that it's like becomes the de facto way of communication for business, for daily interactions. We think that stablecoins can credibly be that, and really open up the imagination of people once you start transacting in a digital manner. Then you look at what else can we do, right? And so that's one interesting data point that we track, just the demand for stablecoins, and that's been increasing pretty dramatically. It was since last year, certainly when coronavirus hit, it's been catalyzed.
So if I may ask you, there's a lot of pros, people are throwing benefits of why using stablecoin. Do you see any cons? Like, are there any disadvantages why a corporation that has never tried investing in digital assets or just moving their money to pay a salary for a remote employee? Is there any disadvantages?
There are. I mean, I think I'd say from the end user perspective, some of the interfaces are not as easy to use or interact with. I think there's been a lot of progress, but that still needs to improve much, much better. I mean, we need to be able to make it as easy as Venmo and PayPal. Some of these applications are just like that, like a Venmo. Like sending a stable coin, you could do it in certain applications, like in Dharma, for instance, where you could send anyone a stable coin with their Twitter handle or their phone, and what's required, I think, is one of the things that is still tricky is securing like your private keys. This notion of it's your crypto, and if you lose it, it's not FDIC insured. You need to be security. Some wallets certainly make it abstract away the complexity of managing security, and because if you lose your key, which is sort of this considered a password to access your funds, if you lose that or it's compromised, then you lose the funds. And so I think from that perspective, I could see a lot of corporations, a lot of people saying, you know what, I'd rather wait a couple days and pay a higher fee because I'm just not as sophisticated to manage my keys. So that would be one example.
Mm-hmm. And maybe you can talk about a little bit of the other benefits or disadvantages of the decentralized finance, right? Because the market is very young, I would say, and there's a lot of unknowns, and people are still just learning about the benefits of it. So maybe a few words you can help us to understand what are the biggest ones.
Yeah, I mean, I think it may be worth just starting, like, why does finance need to be decentralized in the first place? I mean, I think, because that's a question that, like, if it's not broke, like, don't fix it kind of mentality, right? I think a lot of the trends in blockchain have been, let's decentralize everything. And that, decentralization has its trade-offs. You're losing a lot of times performance. You're losing, it could be more costly. You're exchanging, like, trust in a sense, trusting a centralized party, like the way you trust Uber to route all the drivers and manage the payment, the way you trust Airbnb when you're booking a hotel, like that doesn't necessarily need to be decentralized, right? You want to have someone that you're able to call at 11 p.m. when you get to the host and the host is not there. In a decentralized world, it's still very unclear how that would work, right? I mean, you can layer in a bunch of incentives, but finance is interesting because you have a not a very transparent system that is cobbled up together, right? I mean, think of like what Plaid did with just connecting all your different applications that you may be using, but it's very suboptimal. It's inefficient, it's expensive to transact, and not very transparent. For instance, every time that you apply to take out a loan, you always need to exchange private information. Why is it that like there's no central repository where people just have a record of your credit and like you don't need to exchange this information? But we're in a world where we still get our tax receipts in the mail and it has a bunch of sensitive information. So we think that like in many ways a lot of this innovation is interesting in parts where there is no technology stack, there is no banks, there is no JP Morgan or Wells Fargo in the corner. It's just, that infrastructure doesn't exist, and so you're leapfrogging in many ways. Like in some ways, China, for instance, adopted mobile payments with WeChat and Alipay, and most people don't even have a notion of what a traditional brick and mortar bank is. So crypto, in many ways, is closer in that direction. But going to your question of, it's certainly super early. I mean, DeFi has been around for a little over a year, I'd say, in full force. We're excited because that's where we see most of the innovation happening at the developer standpoint, most of the applications, and a lot of experimentation. But there are certainly a lot of risks still. I mean, especially, certain projects still, when you're touching cryptography, certain things can break, right? And breaking here is not like breaking oh, there's a bug and Slack went down like it did yesterday, or assume, something's wrong. And, the worst that could happen is your video goes down. And the problem with crypto is when you're transacting value and money, then certain funds are at risk. And so the level of your MVP, the level of security that needs to be there, I think could be much improved still. But we're getting there, right? And I think that's certainly a risk. And when we look to invest in projects, you really need to do security audits. You need to do simulations, right? Once it's out in the wild, it certainly is in the early days, things can break.
So I'm in New York, you're in San Francisco, and it's two different worlds, I would say. And generally, it's two different worlds for people who are in places where it's still an emerging market. I hate this third world countries. I don't like this notion per se, but I would say somewhere where the economy is not that strong, not in the United States or UK or Switzerland, right? What are the value, what is the practical value decentralized finance can offer to those people? Because you're touching the narrative of almost bank the unbanked, like the 2 billion people that don't have access to any bank or just any financial institution, which I understand where you're coming from. But I want to get to the nitty gritty. I want to understand, what do you offer as a value, right? You invested in many projects in DeFi space, in the ecosystem. So maybe you can help us to understand with some practical examples, like how, one of your portfolio companies changed, somebody's life in, other parts of the world.
Absolutely. Yeah. Look, I mean, none of this is, there's a lot of skeptics, I think, that say, hey, DeFi is just for hobbyists. There's just for people that are there are 20 people tinkering with these projects. Our response to that is go check them out. Go actually try them out and buy a stable coin and try to send that stable coin to anyone in the world and see how that experience is. And it's an eye-opening experience for skeptics, for newcomers in the space, because it's this feels just like PayPal. This feels just like Venmo. And, quite frankly, I think the unbanked narrative is a little overplayed in some respects. While I definitely think it's important, we think it's one of the biggest benefits in the space. We're looking at traders in Chicago. We're looking at some of the best, most savviest traders that are turning to DeFi because that's where they can make more money. There's more opportunity, and it's just faster, better, cheaper, right? It's a 10x improvement. So let me give you a tangible example. There's this protocol called Maker that allows anyone in the world in a permissionless manner to take out a loan by posting collateral. In this case, it would be a certain crypto asset as collateral. So they may own some crypto or they buy some crypto, and then they can take out a loan by posting collateral. That's radical. I mean, that's game changer. The system, the way it works is, we can get into the details, but basically that allows anyone in the world to take out a loan. The interest rate is, they know what they're getting. It's very transparent, and it can happen in seconds. So while I just talked, I could have clicked a couple of buttons, posted my crypto's collateral, and taken out a loan to pay for my phone bill or my rent or, anything really. And so that is remarkable when you compare that with go to a bank, put in the paperwork, the bank may be like, hey, you know what, you don't have a credit score. We can't give you a loan.
But the skeptics would say, sorry to interrupt you, but the skeptics would say that you still need to have a crypto asset, right? You know, you still need to go buy it for the fiat currency and whatever the country it may be, right? And then you would get a loan. So, so the chain is still a bit longer, right? So maybe you can just comment on this a little bit.
Yeah, well, it's certainly certain applications have like 8-step process to take out, like a loan and maker, for instance, or compound, another protocol. But there are now that complexity is being abstracted away by some applications, front end applications like wallets, like Argent, or there's a number of wallets that click of a button, seamless to connect with your bank account, so you could deposit. You could wire funds from your bank account, buy crypto, immediately take out a loan from that. Now, of course, it's a collateralized system, right? Most loans are under collateralized, so you would, but in this case, you're touching a market that hasn't been served before. People that could never access credit, and in many ways, that's very powerful.
And the volatility does not bother me if I'm, putting my, let's say, Bitcoins as a collateral, or Ethereum.
That's a beauty, the premise of it. So the volatility does matter. These crypto assets, as you know, are volatile. So your collateral type is volatile. So that's this notion of over collateralizing a loan by 150%, right? So this is sort of buyer beware, right? Because if the price of Ethereum or the price of the other collateral type Bitcoin may decrease, you need to post more collateral, right? And so otherwise you get liquidated. And so there are some applications, for instance, that automatically do this for you to make sure that that doesn't happen. And if it happens, sort of they backstop in some respects. But I think that would be yet another risk of this system. The other one is going back to stablecoins. I mean, it really is remarkable that you can send money anywhere. I don't know if users, maybe people in the US don't appreciate this, but sending money overseas is across all levels, across all quantities. It carries fees. Your bank account takes even months. It has certain limits. And so even you're not able to send $5, for instance. It just becomes really uneconomical. But remittances are one of the largest sources of income for families, for example, in Mexico, Brazil, Venezuela. Colombia, Singapore, Indonesia, the Philippines. And so that's remarkable. I mean, the remittance flows are, for instance, Bitso, which is an exchange in Mexico, is now handling, I believe, up to 3% of all remittance flows from Mexicans living in the US sending money back home. They expect to grow that to over 20% by the end of next year. That is massive. I mean, that's impressive. And that, I think, speaks to, they just make it extremely easy for people to do this. And so, that the stablecoin, I think, model will really push the envelope forward for the space to make it very easy for people. It doesn't have volatility. It's easy to understand. It's easy to transact. Some of the criticisms around crypto is it's not a medium of exchange. It's too volatile. But stablecoins, in many ways, are, just become a better store of value. If you're living in an emerging country, it becomes a better medium of exchange. When you travel, people always accept dollars, right? And so you can now pay. It's not crazy to surmise that you could be able to travel anywhere in the world, never pay FX fees in the airport or in the local bank, and just use a stable coin.
No, for sure. I think the biggest criticism is not because it's not working, it's because there's a lot of things to learn, and people are just criticizing the process. They consider that the complexity is the first you need to go and open up an account somewhere, Coinbase or any popular exchange. Then you need to buy any stable coin. Then you need to send it to someone, even though it's immediate transaction, amazing, but then the person who actually received it, you have to educate him, like, and it's typically like, imagine if it's your parents or grandparents, like, this is tough, right? There's a lot of education involved, and they have to then cash out into a national currency. So there are still layers, and there is still also like some fees people are paying. That's why, like, they're debunking this myth, like, oh, it's so easy. Well, it's not, because there's many steps, right? So there are pros and cons, and I want to be very like open-minded to like criticism also, in our in our industry, because we have to be transparent, I think, between us, and make sure that people understand the value of it. And at the same time, they understand that, okay, listen, we're still building it. It might be 10 times more efficient. And if people will actually start using it, we'll have more funds and more ability to build a more robust system. So, which brings me to the next question. What is your vision actually in the coming 3 to 5 years? You've mentioned that like there is one exchange that actually processing 3%, and you're seeing that it might be like 20% in the coming years. So maybe some other examples that excite you personally.
Yeah, I mean, I think again, going back to this notion of where is crypto as a whole headed, is it gonna? We think that this crisis is sort of an inflection point in the industry. There's a lot of catalysts internally from a development standpoint. To your point, applications are becoming far easier to use for layman people, not just technologists. And when you look at the macro backdrop, it's hard to ignore. The fiscal stimulus. It will carry a cost, right? In the equation, someone will pay for it down the road. And I think someone like Paul Tudor Jones, he said, look, I'm not a millennial that loves crypto. I'm not, I'm just someone that is perhaps one of the best macro investors of our time, and looks at, there are very few scarce assets out there. And one of the things that we haven't touched on, but crypto allows for digital scarcity, right? And that is pretty powerful. When you think about what makes good money, there's a couple of properties, but I think the top three are divisibility, acceptability, and like durability, right? And so, when you think about a paper dollar, it can break, but it's somewhat, cotton's okay, and linen can somewhat hold. It's universally acceptable. Like there's this fungibility aspect where like, people understand it, and it's like a uniform standard of a dollar, and like they're a counterfeit, but like by and large, it's accepted. People know it, recognize it, and it's divisible. And in many ways, like crypto is that and better, because it's like a stable coin. Now you could argue what needs to happen, I think, over the next 5 years is you start seeing in your day-to-day interaction the ability to pay natively from your phone, Apple Pay or Google Pay or whatever application you're using, with stablecoin. So you never have to think about converting to a local currency. You never have to think about cashing out of the system per se. All you need to think about is you get paid in a stablecoin, you receive the stablecoin. It might be through Facebook Libra initiative, which is probably going to launch. It may be through some other application that you're using, like Venmo, and you just scan a QR code, or you're like using your, just tapping your phone when you go to the supermarket or when you go to transact with friends. And so in many ways, it creates sort of an economy where, most people don't carry wads of cash anymore, and certainly not in Asia or in other parts, like in emerging countries. So, that really creates a good economy. And so I think we're going to start to see crypto grow up, like crossing the chasm, if you will, of over the last 10 years. You're absolutely right. I mean, this technology, in many ways, it's good that a lot of people haven't really adopted it, because there have been a lot of mistakes along the way. There's been a lot of learnings. We think that the quality of the developers has improved dramatically. You're now starting to see the caliber of teams that we're seeing just keeps getting better and better. And I think one of the things that you mentioned is really important, which is there hasn't been a big focus on, there's been a lot of focus on the technology, like on the cryptography side. And that's very interesting. A lot of the smartest minds are focusing on that. Not a lot of focus on go-to-market, not a lot of focus on customer acquisition, not a lot of focus on how do I make this actually usable for people. When projects launch, I think that's when they realize, okay, we have to actually have that in mind, right? And so that's been under indexed, but we're getting there. I think we're crossing that gap between, the narrative on crypto has always been very powerful, this magical technology, that digital money, digital gold, whatever, that narrative has shifted so much over time. We actually take the view, or I take the view, that people don't care about crypto. The same way that you don't care about how the internet works. You care about, is this video conversation in real time fluid? Is it working? When I use my credit card online, is it going to be stolen, or HTTPS work? And that's our view. People don't care about crypto. They care about the bottom line. And that's, I think, where this technology will become harder and harder to ignore. And you're starting to see that with stablecoins. So our thesis is most of the opportunity in crypto is in open decentralized finance. Not because, there's this notion in investing where, I can't predict the future. I can't tell you what's going to happen in 5 years. I know I'll be wrong. And a lot of times investors really focus on, I want to get the future right. And if you get the future right, you may be lucky and you can create a massive windfall. But that's why it's hard to replicate that. What we focus on is, let's really understand the present extremely well, and then invest behind things that are working, have tangible product market fit, are early, but are gaining really good traction. And so that's, I guess, the distinction between our investing approaches. We want to have a really good pulse on the present and what's working, and certainly an eye towards the future of where could this go, and sort of open up the imagination. But we don't take those kinds of bets. We're investing in things that are working today, that are getting good traction, that have, have earnings, that are profitable. We can talk about valuation, how we think about the space, but a lot of times people say this space, how do you value crypto? This is it's a bubble. It's hard. Certain parts of crypto are hard to value, but we're looking at P ratios. We're looking at earnings that are equally or more compelling, lower P ratios than fintech companies, or a Shopify or Lending Club, or Visa or Plaid, or or Robinhood. These are protocols that we think will create a ton of value in the application layer. So that's something we haven't talked about, but when people ask us, it's true. Where's Bitcoin going to be tomorrow? It's a random walk. We don't know, but we're not making the bet that a central bank is going to buy Bitcoin anytime soon, or that all of a sudden everyone's going to wake up and say, you know what, Bitcoin is the solution, or Ethereum, or whatever. That's not the bet that we make. We focus on a very focused approach in our framework, which is kind of what our upbringing is. The same with diligence that we would do at firms like KKR or TPG or JP Morgan, is that level of analysis we're able to see in crypto. So I think one of the other things that we're going to see, and I'll pause, is the space has been very correlated so far. Everything moves in one direction. And I think that there will be an uncorrelation of crypto assets, and crypto will trade on fundamentals. And I think that's very exciting for us, because we actually get a lot of conviction when we do our analysis, and you're able to compare that to the traditional financial, fintech companies and private valuations and startups in Silicon Valley or elsewhere. And in many ways, if I were to describe to you a protocol, what we think DeFi is the next fintech revolution. I mean, you mentioned it, but if I were to describe to you a company that without saying DeFi, without saying crypto, blockchain, and I would describe the profile of the company, it's global in nature. Fintech, it can attack a global market. It is growing 100 or 150% year over year. It has 80% plus EBITDA margins, or cash flow conversion. And by the way, it is giving out a dividend every quarter to investors. And say generated, I don't know, 5 million in earnings last year. What multiple would you put on that? What value do you think that would get? You walk around Silicon Valley, you ask these people, wait, what? The Holy Grail? This is a global company, massive TAM. You have growth and profitability. This must be not a unicorn. This might be the next sort of whatever.
TAM, but no, it's target addressable market, right?
target just like if you're investing in Lending Club, it's hard for you to scale beyond the US because you need all these licenses and it's really hard, right? The operating leverage that you get in a protocol, it's like decentral, it's like open, it's open to the entire world, right? So sure, it's super early, but hey, by the way, it's profitable. Like, oh, it's trading, we're investing, we're at sub 10 million valuation. Do you think that's fair? Do you think that's reasonable? Oh, here's our DCF that shows the analysis of like how fees work, how the model, how value accrues to the token or the equity. Like, I don't buy this thing that, you know, crypto is, yeah, sure, it's a random walk. Markets are a random walk, at least my view. But I do take that we strongly believe that crypto assets can be valued in a fundamental way. Not all are the same, but you know that's.
You know, the valuation point is very important, and what I liked about your comments also in terms of like how the DeFi is actually accepted. In our previous interview with Miko, he actually offered a notion of open finance, open source financial infrastructure, which I really like. You know, it's kind of, you know, it's more mild. It has no like this crypto connotation, which, you know, repels a lot of people naturally because of the stories of mistakes and the famous SEO scam era, right? So, but generally, I think there is another important criticism that I want to offer you to discuss. There's a lot of in our industry, there are people who are, I would say, like maximalists, like either they're Bitcoin maximalists or they're DeFi maximalists, and they consider, like, for example, if you say stablecoin, some would say, listen, it's a cryptocurrency, and others say, no, it's not a cryptocurrency at all. Like, it's a financial surrogate, call it whatever you want, but it has a centralized database. It's has, you know, like it has owners or people like in the example of USDC, right? You know, there are big shareholders, right? And the pure decentralized protocol or generally like a project, it doesn't have owners, right? So, and how would you try to rebuttal this argument that, like, you know, the DeFi should have all the properties, like, you know, of the pure decentralized network, and all other projects that are just on, you know, proprietary blockchains that are not, or may not call it even a blockchain distributed ledger, they might not be even considered as DeFi.
Got it. So yeah, I think what you're getting at is this notion of like decentralization, and like, is it truly, some people have like a very strict, pure vision of this needs to be like totally decentralized, censorship resistant. No one can break it. No one can, not owned by a central government or what have you. Like, I think you see a lot of that in the maximalism that you're talking about. Right. And so the question really is, where do you draw the line and what's acceptable? I think it depends. I mean, our view is that, you know, it's a spectrum, not binary, meaning, you know, a lot of times you work your way towards decentralization. You know, for instance, some projects that we invest in very early, you know, are building the protocol, are building the front end. They're a company, they're hiring engineers to build in the same way that a startup would. You know, you try to decentralize something like that early, and it becomes chaotic, totally anarchic. Like, product doesn't get built. Everyone is being pulled in a million directions. Open source systems are very chaotic. You know, it's like telling a group of kids, like, hey guys, you can do whatever it is you want in this hour. Here's a bunch of crayons. Like, just go and draw whatever you want. You got to tell them, hey, look, I'm going to build a house for you. You're trying to build this house in your piece of paper, and you can't, like, there's these guardrails in the sandbox, and, you know, just play here, get familiar with these colors, and then like over time you start, you know, loosening some standards, or not loosening standards, like opening up degrees of freedom for them to experiment a little bit more. And we certainly view that, look, at the end of the day, we are more practical in this approach with saying, you have to build, none of this matters if it's not easy to use. None of it matters if the product is not quality or a 10x better improvement to traditional solutions, right? In order to get there, there needs to be direction. There needs to be leadership. And that is something that sometimes is lost in this decentralization. Mind you, Bitcoin is different in the sense that like this Satoshi, whoever he was or group, put it out in the wild and it worked. It worked because a lot of people didn't cared about it to the point that they're, would have been vulnerable early on. Like it was, if people were to try to hack this network early on, they could have, but no one really paid attention to it. But now there is this idea that these networks can work. So there needs to be leadership. Like look at Ethereum. It has Vitalik. Vitalik still carries a lot of weight. The core developers that are building Ethereum technology at the base protocol are in some ways like, if they were to go away, this network may not get to its full potential or may become irrelevant. And so long story short is, I think it's what we call a, progressive decentralization. You decentralize certain aspects of it that are the most important. Like, can you change like the number of shares, like the token supply, like those certain things like need to be hard coded, can't be changed by anyone. Can anyone access funds or drain wallets? No, like those things certainly like should be in a vault, but the direction of the product definitely shouldn't be decentralized. Like, sure, you can pulse the community, the people that are interacting, the other developers in the ecosystem, the other users, but these things should be progressive, not binary.
I agree. I actually think that you're having a good point there, because there's a lot of criticism. People are saying like, even lending, as you've mentioned, they say like, oh, you know what, it's just a sheep in a wolf clothing, and it's not a real decentralized products. And I think we should be very, very cautious with this type of declarations, because it actually annihilates like all the good efforts of entrepreneurs who put their life in stake, meaning like their efforts, their hours, their like investors who invest dollars, and it's a form of trust. So we have to remember that any investment, it's first of all, it's a trust to someone who will go and build a product. So to devaluate this just because you're not happy of the format, and you do not let this experiment to actually prove itself working, and as you mentioned, be user friendly and improve lives of people, I think it's not helping the industry, right? So that's why I wanted to explore it with you. Now, in terms of the size and the volume, you mentioned about valuation, which is a very interesting topic. But as we understand, DeFi is a very small market. It's like a drop in the ocean of traditional finance, right? So, you mentioned a few words about how do you see it's going to evolve. But if you go a little bit deeper, like and talk about like what are the most exciting things that are being built? Again, maybe some examples of your portfolio that you see, or maybe some other projects that you just follow and you think those can be the unicorns.
Definitely. Great question. A couple of things that are really exciting. Right now in crypto, you can only borrow at a variable rate. So rates can fluctuate quite a bit. One of the things that we are looking at is teams that are building the ability to borrow at a fixed rate. The same that you could the notional amount of debt outstanding in the traditional system is like order of magnitude higher for a fixed rate. Why? Because it's predictable, right? You want to borrow at like 10% or 5%. You don't want to borrow at any day it changes. So that's something that critically needs to be built in the system to really get businesses interested in borrowing, right? Because right now you could borrow at 5% one day, and then the next day the rates change and it's like 15%. So the sort of the way that the mechanism works to set interest rates. So definitely fixed rate borrowing is essential. One of the other things is, one of the inefficiencies of the system is high collateralization ratio. So like, it's pretty remarkable that this system has been battle tested. Like something like Maker has been able to withstand, like the price of the underlying collateral has collapsed 80%. And you still have this stability layer of DeFi, like the central bank of DeFi, if you will. It's pretty remarkable that it has worked in an algorithmic way where, like, based on market incentives, you're able to change interest rates to stimulate like borrowing and lending and People post more collateral. They don't get liquidated. Like it's pretty remarkable that it's been battle tested. I mean, this notion of like anti-fragility, like, you know, it becomes stronger with chaos. And we're certainly see that. I mean, this asset has not been, you know, something like Black Thursday, which happened last month. I mean, crypto prices collapsed 40% overnight. You had 4,000 simultaneous liquidations in Maker, and there was no bailout. The system still lives. It's still collateralized. Moving on, business as usual. So, but it certainly exposes flaws in the system, right? And so, can we have, you know, one of the other things that we think of is, do we need to have a very high collateral, right? Because if you're borrowing, then you don't necessarily want to use crypto unless you really have to, right? But why would you post all this collateral? You know, why would you post $100 to be able to borrow 60 when you can go to the bank and just, you know, if you have credit, you can borrow without posting over collateralized loan, if you will. And so we're looking at, can you build a reputation layer, right? Because crypto is pseudonymous. You don't know who's borrowing. There's no trust. And so that's why I take comfort as a lender that there's collateral backing this loan. In the case of prices collapse, it's like a buffer that I can liquidate and I get my money back because it's very risky. But can you build a reputation layer where you incentivize people to build a credit score and disclose some information, not all, still remain pseudo-anonymous, or give people the option to reveal their identity and pull like their FICO score into DeFi? Like we invest in a project that's trying to do that, connecting with your bank account, your telephone bill, to build a credit score effectively to be able to borrow, right? And so that is super exciting for us because I think that really opens up.
Is it globally or locally?
Globally. So what's interesting is your credit score is actually not very predictable. I mean, it's good, it's work, but most countries, A, don't have a credit score system, and B, you know, that some, you know, there are other variables and dimensions that you can layer in to build a more rich credit history. So for instance, one of the things that they're exploring, was our idea was, hey, most people everywhere in the world have like smartphone penetrations, like up to 2/3 of the world's population. Everyone pays their phone bill on time. I mean, it's critical, right? So if you can pull in data from effectively they have a very rich credit history of payments or not of their phone bill on a monthly basis. And so you can infer what their income is and the predictability of that. And so, hey, why don't you just pull that? And effectively you have a credit score for 2/3 of the world's population overnight. And so, and then that is another, like, so that's really kind of pushing the envelope forward, right? Where the government's not going to build it, credit institutions don't exist overnight. You're pulling data from their, you know, their smartphone bill or their telephone bill, and you're able to see, you know, how good of a borrower they are. So that's another thing that we're very excited about.
There's another example which you brought up, a very exceptional example of MakerDAO, like, and how they were able to sustain the latest drop, like the price, and there's no bailouts, right? You know, like it was just like an organism that exists in itself and it somehow survives. Now, the question is, do you think this example can be extrapolated to our banking system? Like, you know, if they would actually digitize dollar, like, you know, in the same manner and apply the technology, and it can be like, do you think it's a scalable system, like, and that would survive like something like U.S. economy?
Oh, well, this is opening a can of worms that's just more political than economical. Can it work?
Sure. Hypothetically. Of course, there's a lot of nuances there, right?
Yeah, I mean, you've seen a system like Maker that survived 2 years in a true bear market in crypto. The price of Ether has collapsed 80%, which was all the collateral behind these loans. And it was able to maintain the peg, right? When you deposit Ether as collateral, you take out this stablecoin called DAI that is meant to maintain its peg to the US dollar. That peg fluctuates a bit, but by and large, it's been remarkable. It's maintained its peg. When the price of Ether has done this, but the peg of the DAI has done sort of this, right? And just to give you a sense how powerful the DAI is, people in Argentina, for instance, historically have been, you can't. Argentina is one of those examples where there's capital controls. You can't get your money out of the system, and dollars trade at a huge premium in the black market. The Argentinian peso has been terribly devalued, like so many other currencies in the world. DAI trades at a huge premium there because people just want to get their money out. It's sort of a premium on this capital control. So, one of my favorite books is sort of the Sovereign Individual. Why? Because there's so much there. I mean, he was able to, like Nostradamus, he was able to predict so many things, like the digitization of money. One of the flaws of the internet, like Mark Andreessen, I'll credit him with this, is he said, one of the flaws of the internet is like you couldn't move money. There was no money layer for the internet. You can't move money in bits. I think my sort of, if you were to ask me what's my 20-year vision of where we're going, I think we're at this slow transition of decentralization. Not because people care, but because centralized solutions just are not working in many ways. And so there is this sort of unbundling, if you will, of certain things. Not everything, but certain things. We'll always have a community. I think we're social beings. We'll always sort of want to interact. But as it relates to money, and even like artificial boundaries of countries, like those sort of things, I think over time, I think will become less important. I'm not saying they maybe totally fall apart. They'll become less important. And, I think of, take esports, for instance. Hey, if you were born, you've been playing esports all your life, can there be this sense of nationalism for your esports league, which is not bounded by like countries, right? Some people might be more, fanatical about their esports league than they are about their countries, right? And so I think like humans always want to have social interactions, and there's certain traits, we're American or we're Mexican or we're Brazilian, but I think that will slowly kind of become less and less important as we're global, we're interacting with people across the world. And I think that's part of this digitization of money. Do you need all these local currencies? Arguably not. Arguably not. I mean, certainly like the consumers are already putting in they're casting their vote in many ways, right? They don't want to have local currencies. And I think we're going into a macro environment where that will just continue to be, the pain will be felt where most people flock to dollars. So the question becomes, hey, will the dollar continue to be the de facto like safe haven for the world? I don't think that's, I'm not prepared to make a statement on that. I don't want to predict the future, but it's historically, what we think of value and money has changed so much, and people forget that this entire financial system is relatively young, And so anyone that says that it can't be changed, it can't be disintermediated, it can't totally be transformed, doesn't have an appreciation for history.
100%. That's a beautiful statement. I subscribe to that because I've learned a lot about the history of the money and the difference between money and currency and how it appeared, why people started to value like paper bills, like as opposed to like seashells or any other barter exchange, so or gold, and we're certainly seeing a paradigm shift. It's a transition of value, as you've mentioned, and it's a transition of different worldviews. And I do believe that becoming a global citizens, and especially with this virus, we don't need any more like one dominated currency. And yes, this realization will take time for the majority of the people to actually start accepting those things, because for now people are more like, they care more about like survival, which in this context you cannot talk about the DeFi or anything else, right? But slower, like I think we're going to see people actually looking at those research and some of the underlying projects that bring them value on a day-to-day basis, and that will change a lot. So to conclude, maybe you can offer us, like, you mentioned your favorite book, and if you can offer some other good reads, might not be even in crypto, and some people that you follow and you admire, you would recommend also to take a look and to learn from them.
Totally. Oh, so much. Well, I'll keep it away from crypto, right? Because one of my favorite books is Infinite and Finite Games. It's a very short read, and it really is more philosophical of how we conduct ourselves. Like, are you playing an infinite game? It forces you to really just kind of like invert and go backwards and say, really focus on reputation, how you conduct yourself. It's a lot of game theory, but it's also very like philosophical, and it touches a lot of elements of in this notion of finite and infinite games, right? Are you playing a repeatable game? Do I care about my reputation? So that's a really good book. I love blogs, and Twitter is I think becoming. I mean, crypto Twitter is where I get all my information, but I think Twitter is a fantastic source. One of my favorite blogs is Marginal Revolution by Tyler Cowen. He is a force of nature. I mean, he consumes knowledge like no other, and he posts. He pulls so many different topics, not all, not about the economy. It's a great blog. Posted daily, which is incredible. I mean, I think he's 60 or 70 years old. I mean, he's just amazing. And that's, I get a lot of my content from there. So Tyler Cowen, he has a podcast as well, and so he very, very sharp mind, and really at the sort of the forefront of things that are happening. I guess, so what was the other question? So other people that we've covered.
Yeah, people that you follow, like, and you would like consider that the audience might actually enjoy, like, their views. Again, it can be macroeconomical, like, or not necessarily just like crypto entrepreneurs or thought leaders. Whoever you admire, you would consider that following them can bring some new knowledge.
Yeah, I think I would hold my ground with Tyler Cowen, because I think what the beauty of crypto, at least most rewarding for me, has been really challenging even the most basic of assumptions. And it's a constant reminder of even asking very basic questions. Sometimes we're afraid to ask, like, how does money work? What gives value to money? And going back in history and understanding these notions, and what is trust anyways? We trust money. What are we trusting? And why, and so that's the beauty of crypto. It's all a constant exercise of challenging assumptions and really pushing the envelope. And I think it requires an understanding of economics, history, psychology, sociology, anthropology, engineering, like cryptography. And so someone like Tyler's mind is just sort of like a panopticon of people. It's just sort of like very multidisciplinary. You said it best. So yeah, I think it's a big source of inspiration for me, at least. So I would highly suggest your audience to check it out.
Amazing. Really appreciate all your thoughts, and you definitely have a different vision and an interesting one. And I would say there's a lot to learn, from what we are experiencing at this particular moment, which is not easy for the entire humanity. And I think what we're doing here is just, trying to share a little bit of positivity and ideas for the world, how it will change for the best. And I do believe that this technology will definitely help. And I really appreciate your time, Santiago, and wishing your fund and your team stay safe.
Thank you so much, Constantin. It's been a pleasure, and I'm happy to have been part of it, and hopefully it was helpful to your viewers. So thank you so much, and stay safe out there in New York.
Yeah, thank you.
Thank you. Take care.